Hello, everyone. Thanks so much for joining the Landman webinar. Very excited to dive into this topic today because I think it's widely misunderstood. Cori, you can probably speak to that. But without further ado, we'll kick things off. Thanks for joining, everyone. If you're listening to this on the recording, thanks for taking the time. Cori, wanted to welcome you to the platform. You joined us very briefly during Mark's off the record call last week, but for all of those of you who are on the call, Cori Willett of Redwood Energy. Cori, thanks for joining us.
Thank you guys so much for having me. So excited to be on today and talk about being a landman. Tait is right. There's definitely in the past couple of years, I think, more confusion than ever about what a landman is and isn't. First and foremost, as you may have noticed, a landman is not always a man. So I've been a landman for, over a decade. Lots of women in the business as well. We are still called landmen. So if you have any concerns about if you should call me a land woman or land person, we are still landmen. So misconception number one has been debunked.
Well, and we got to spend a good amount of time together at the NAPE conference in Houston back in February. That was a really great time. And Cori, you've been doing some contract work for us in close coordination with Mark, getting some of these deals across the finish line. So yeah, we really wanted to take the time today to demystify the role because it really is an integral piece to running our Waypoint Energy Fund, and break down exactly what it is that you do on a day-to-day basis and the experience that you've had working with Mark so far this year, and where we're going from here.
Yeah, I'll jump in. Have loved working with Mark. I'll note Mark and I are actually both here in Houston, Texas, which is largely considered the oil and gas hub of certainly of America, largely the world. United States being the largest producer of oil and gas in the world. Houston is the epicenter of where most of those companies are located. So we're both here in the thick of things, running with different operators and people in the business all the time. That's actually how I met Mark and became affiliated with Tait and Turbine. And then a little bit about my background may be interesting just to know kind of how someone becomes a landman. I graduated from Texas A&M. Seems like a long time ago, back in 2003. I will say a couple things about my time there just because it makes me sound like a prototypical landman, which is I did ride horses. I was on the equestrian team there. I grew up riding horses and I grew up in a ranching family. You do not have to grow up on a ranch or ride horses to be a landman. I just happened to be one that did. So I kind of fall into that stereotype. Anyways, I digress. After A&M, I went to law school, also at A&M. So double Aggie here. I don't know if that helps or hurts me in y'all's eyes, but I did go to law school at A&M as well. And I've been in the industry since I graduated. The first thing I did while I was waiting on my bar results, this is actually how I got into oil and gas. I don't know if everyone knows. If you're a lawyer, you probably do, but it takes about 6 months to get the results on your bar exam. So here I am, I've taken the bar exam, I've graduated law school, I'm waiting on these results, but I have nothing to do. So I'm like, I got to get a job. And there's an oil and gas company that said, hey, you have a law degree, like come be a landman for a few months while you wait on your results. So I got started doing that and ended up, once I got my bar results, taking a job with an oil and gas boutique firm based out of Fort Worth, Texas. And I worked there for about 3 years, working for a number of exploration and production companies. Some of our clients were names that I think anyone on this call would know. XTO, which is now part of ExxonMobil. Devon Energy, who made headlines last week. They spent over $2 billion with a B, in one oil and gas lease auction in New Mexico last week. So big name in the industry, making big headlines just recently. Those were a couple of our clients. And what I did for them was advise them on who owned what. Sounds extremely simple, right? Who owns what? So I spent years at a law firm advising operators before they went to drill a well, who owns what you're about to drill in its simplest terms. After that, I spent about 7 years with what's called a land services company. We had around 400 landmen working for us nationwide. That's a lot of landmen. And what we focused on there was researching that ownership. So when I was at the law firm, I was advising on ownership. When I was at the land services company, I was doing the research that is provided to the law firm in order to advise on ownership. So this is when you hear about a landman who's been out in the field for a long time or in the courthouse several years ago. That was not digitized like a lot of it is today. Landmen were physically in the basement of courthouses in just the most remote counties you can think of, actually opening up, old deed books from the early 1900s, reading handwritten documents to figure out who owned what before someone goes and drills a $10+ million well. It sounds crazy, but it's absolutely true. Literally handwritten documents, being able to decipher those many years ago, still today, because they're digitized, you still have to read handwritten documents. Yeah, Tate.
Something you said there was, verifying ownership. It sounds simple. It's like who owns what.
Yeah.
But in this space, it's far from it, because you're talking about
It's far
decades
from
or even
it.
100 years plus of ownership.
I'll
changing
digress just
hands.
a little bit from my
Yeah.
my background to jump into that. So it's extremely complicated to identify who owns what when you're talking about drilling a horizontal well. So if anyone was on the call with Mark regarding like the engineering and technical piece last week, said, Waypoint is investing in unconventional areas, which means horizontal drilling. You're looking at 2 to 3 mile laterals, meaning they're drilling down to a certain depth and then across for 2 to 3 miles. Well, you've got to get a lease from every single person that has an interest across that 2 to 3 mile plane. And the United States is actually, out of the top 10 oil and gas producing countries in the world, we're number one, but we're also the only country that has privately owned oil and gas rights, right? So Canada's up there. I think they're top 5, but only 20% of their oil and gas is owned privately. Most of it is owned by the Crown. The United States is the only one that is majority privately owned, which means tons of owners are involved, right? Tons and tons of owners. If you're looking at China, there's one owner, it's China. When you're looking at the United States, there's millions and millions of owners because it's privately owned. Right. So that research can become very fractionalized and very detailed. So it takes a ton of landmen and a ton of attorneys and a ton of research to figure all of that out. And that's what I spent if you put together my time at the law firm and the time at the land services company, I spent, the first 10 years of my career focusing on that research and became very much of an expert on it. But it's extremely complicated. And you've got to imagine, right? Like we talk about risk and what are the risks of investing in these wells, et cetera. Imagine if you're the operator, the person that's actually going to drill the well. Some of these really deep 3-mile laterals are $16 million for one well. You really need to know that you've got it right before you go in there and poke a hole in the ground, because if you don't, you're opening yourself up to trespass. And that is a risk that they definitely don't want to take. So I spent the early part of my career working on that. I transitioned after that to work for a private equity company, actually based here out of Houston. We did several things, investing in minerals, investing in non-op. We drilled some wells, which I will tell you from experience, investing in wells is so much better than drilling wells. So y'all are going down the right path here. Drilling wells is a whole different ballgame. It was very complex. And I will also tell you, we brought our first wells online in February of 2020. So if y'all are familiar with that time, that was a rough time. So invest in wells instead of drilling them, make your life much, much easier. I was with that private equity company for about 4 years in dual roles. I like to think I might be the only person in history that was both the vice president of business development and also the chief compliance officer. Very rare combo, very, very rare combo. But we were a registered investment advisor, and I was our chief compliance officer reporting to the SEC, and then obviously internal controls as well. But I was also in charge of bringing deals in the door and getting them to the finish line. It's combo, but that's part of what makes me, I think, a really valuable asset, and the aspect of finding deals that are unique and highly valuable, understanding how to get them to the finish line, which is what I'm helping Mark and the turbine team with, but also making sure that you're doing all of that the right way, right? Because we talked about risk. We always want to mitigate risk. We always want to build good partnerships And so doing things the right way really helps to ensure, my reputation, your reputation, and our ability to continue to get deals done. So a couple other things about me, and then I will stop talking about me and talk about Landman in general. I also launched in 2022 an organization called Women in Minerals and Non-Op. Just having been around the industry, it is generally a heavy male dominated field. There's nothing wrong with that. However, a friend of mine and I thought it would be interesting to see if there were more women in the business than we realized, and thought, if we build it, they will come. And we did. So we built this organization in 2022, and it is limited exclusively to women in the decision-making space in minerals and non-op. So we launched that in 2022. As of today, we have over 150 members. So we did find out that there were a lot more women in the business than we thought. We just hadn't seen them. So we've created opportunities for those women to come together. We host 4 events a year. We do an executive retreat for executive level members, which is fantastic for me on the professional side, because I'm meeting in these really intimate settings with huge decision makers for groups that, send me non-op deals, right? Or also help me understand what might be going on with a particular operator. We'll kind of get into some reasons why that might be helpful in a minute. And then in 2023, I launched the company that Tait referred to, which is Redwood Energy Services. That's my company. I literally named it that because I'm tall and I have red hair. So I thought it was instant branding.
I didn't actually
So that
know
makes
that.
it easy for people
That's
to
great.
remember me. But so what I do is I help, mineral and non-op groups source non-op deals in a unique way and build their relationship and reputation in the business. That's a little bit about me and kind of how I became a full-time landman.
That's amazing, Cori. Thank you for sharing. I'm sure that people have specific questions that we can get into, but before we get there, I want to kind of pivot to what exactly does a landman do, right? I mean, we've seen the show.
Yeah.
Mark has said before, had they called that show Company Man, it probably would have been a little more accurate, but that doesn't have the same ring to it.
No.
How is Landman different than what Mark is doing? That's a question that I'm sure is top of people's minds. Mark, for reference, comes from a petroleum engineer background and is very astute when it comes to the analysis of these wells and making sure that he likes it from a technical analysis standpoint. So maybe helping people to understand what your role is in the beginning of the life cycle of looking at a deal. And then once we actually bid on a project and potentially win it, what the process looks like from there.
Yeah. So landmen, the most generic definition of a landman is that they are the public facing person for oil and gas companies, right? So Mark is a unique bird in that he's a charismatic, well-spoken person. Not every engineer in the world is that way, right? Not every geologist in the world is that way. Not every finance guy in the world is that way. And so what oil and gas companies do is they rely on their landmen to be the public facing person of the company. Meaning, if you need to negotiate an oil and gas deal with the landowner, or you need to negotiate some sort of amendment on a lease with a business, it's typically going to be your landman that does that, right? It's not your engineer that picks up the phone and negotiates with another engineer. It's a landman negotiating with another landman. We're who you see out in the field doing deals. If you've ever seen, like in your communities, sometimes they'll have like big community like leasing meetings, right? They'll come through an entire neighborhood and they'll meet with all the owners in a neighborhood. It's a landman that's there representing the oil and gas company. So there's landmen that are out there doing field work, like I described it before, in courthouses, doing title research. That's a landman. There's landmen that are out on like an actual, like a drill site, right? There's a component to they have to actually survey and stake exactly where certain things regarding drilling the well are going to be. That's a surface landman. There are people that are out there knocking on doors. And I say knocking on doors, literally knocking on a door saying, hi, like I work for ExxonMobil. We want to lease your mineral rights. That's a landman. You've got people that are out there that are trying to find large scale deals, medium scale deals for either their company or client. That's a landman. And then, like I said, people that are actively negotiating any kind of contract. Oil and gas business, we're dealing with contracts, different forms of contracts all day, every day. It might be an oil and gas lease. If we're working on a non-op deal with an operator, it might be what's called a joint operating agreement. Any number of contracts can be involved. Any sort of negotiation regarding price, terms, all these kinds of things. A landman is who is handling that. As I mentioned before, my background, I've done pretty much everything in the scope of being a landman. What I focus on now is negotiations and business development, those two aspects of being a landman.
Business development is a term that's used quite often in this business. Do you want to describe what that means generally?
Yeah, it is. It's used a lot and it is used in different ways. So, internal business development, if you're talking, I'll just keep using ExxonMobil as an example because everyone knows them. If you're talking about an internal business development person for ExxonMobil, that is probably an engineer, right? So, what they're doing internally is they're looking at everything that ExxonMobil owns. They're looking at all of the leases that they have. They're looking at reservoirs and what they think future opportunities are. And they're putting together a plan, develop business moving forward and long into the future. It's like that's that internal engineer business development. There's another aspect to that, which is typically going to be a landman that is putting deals together, right? So engineer says, hey, we want to go drill section number 1, but we want it to be a 2-mile lateral. Outside landman, I need you to go talk to people in section 2 because the only way we can do a 2-mile lateral is if we get leases in section 2. Or, Turbine Capital already has some leases in section 2. Do you think they would participate with us if we did a 2-mile lateral, right? That's where I get involved. I'm saying, okay, I think there's an opportunity here in section 2, right? Because this group wants to drill a 2-mile lateral. They're looking for people to come in and participate, or they want to buy some of this leasehold, et cetera. So they go hand in hand, but you're really doing two different things when you're looking at kind of internal and external business development. So one of the things that I do and focus on really heavily, because I've been in the industry for so long and have worked so many different aspects, is relationships. I mean, people talk about how important relationships are in business all the time, and that could not be more so the case in oil and gas for a host of reasons, right? One is seeing unique deals, right? Oil and gas is an extremely lucrative industry. A lot of people want to invest in oil and gas. And so there's a lot of competition out there. And there is a host of ways that deals come to different buyers. So we'll talk about the different ways that deals come to buyers. One is a third-party marketed process. You're talking about investment banks, websites, digital marketplaces, et cetera. A lot of sellers will go to those third-party groups and say, I have this asset I want to sell. I have a non-operated working interest I'd like to sell. Can you please market this for me? It's great. It's wonderful because they compile all of the data. A lot of those companies will give you their input on that data and it comes to market. Great. There's hundreds of opportunities there, but a lot of people do look at them, right? So it's great. You want to get all of that data. You want to get those shots on goal. There's a lot of opportunity there, but there are a lot of people bidding. The other way that buyers come across deals is through self-marketed processes. I still call them marketed because they're going out to a large number of people, but individual companies, especially large companies, almost exclusively large companies. So think about EOG, BP, companies like that. They receive well proposals where they have a small interest from other companies all the time. Most of those companies prefer to spend their dollars on their wells. So what they do is they send to a select group of people that they know and have some sort of relationship with. They send them those deals, right? They send it on a consistent basis, and that's how they market those deals. So it doesn't go out to the whole universe, right? It's not a third-party marketed deal. It's going out to a select number of people, but it's still going out to a fairly large number of people. I will say, I mentioned relationships earlier. Even on those self-marketed deals, yes, if you're BP, if you're EOG, you're a publicly traded company, you have a fiduciary duty to take the best deal for your company. You absolutely do. However, if you have a good relationship with those companies, they can guide you towards, I don't think that offer is going to be competitive, right? They can do things like that, right? They can't sell to me for less than a better offer. That would probably be a breach of their fiduciary duty, but they can say, hey, Cori, if that's where y'all are planning to come in, I don't think you're going to be super competitive, right? They can give us that information, which is very helpful. So having relationships there helps. But in addition to that, the third category of where you see deals is completely off market deals. That means they're not online, a bank's not marketing them, it's not going to a listserv of people. It means, for our purposes, someone called me and said, hey, I've got this deal, I want to sell it. I don't want to do a big complicated process. Or they might say, the last deal I did with you went really smoothly. I'd like to just get this done. Do you have a buyer for it? And my answer is, yes, I do. I'm working with Turbine Capital. Let's take a look and see if it's a fit for them. And those deals can get really interesting because typically, even if you're not one of one, you're, one of maybe three or four, right? And lots of times those are private groups who can sell it to whomever they want, right? If four people make an offer and all four are within, 2 to 3% of each other, they absolutely can say, you know what, Cori, you were 2% lower, but we love working with you. Let's get it done. And so that's what I spend a lot of my time focused on, is finding and sourcing those off-market deals that are going only to a select number of people. We're not bidding against a lot of people, and therefore, hopefully getting some really interesting, good value deals.
That's great.
I had a question for you, Cori, that just based off of the 3 different categories you explained and the off-market opportunities that you mainly work on for the relationship aspect, like how much of that can be negotiated? I know they can come back to you and say, hey, yours was a little bit lower than others, but do most of the time they say, here's the terms that we're willing to sell, and you either accept or decline? Just curious of like where we have wiggle room to then put in a better bid to get approved.
Yeah, I mean, pretty much everything can be negotiated, right? If I know that I'm putting in an offer that is maybe slightly lower than the seller's expectations, I try to compensate with something else, which may be shortened due diligence, right? Typical due diligence period is going to be anywhere from like 30 to 90 days. If we're looking at a small off-market deal, normally, it's fairly simple to verify the title and do due diligence. And so I might say, hey, like this is our offer. It's less than you want, but we're willing to close in 15 days. That can move the needle in negotiations pretty heavily. They might, instead of a lot of money in 90 days, a little less money in 15 days can really move the needle with people. So it just depends on the seller and what their motivation is. But I would say almost always you can negotiate anything you want to negotiate.
I will say that we're very disciplined buyers, and having cash in the bank helps us tremendously as well, because we can show proof of funds and say, hey, we have the cash sitting here in the bank ready to go. We don't have to go raise it. We're not bidding on projects that we can't afford. So something to take note of. Dave had a question here. What do you view as a home run, middle of the road, or a deal you typically pass on? So what would something look like that is an absolute home run? What does a deal look like that's sort of like, this is a base hit? And what would make you want to pass on something?
Yeah. So Mark obviously is doing the underwriting on what returns for certain deals look like. But from a landman perspective, where I feel like it's really a home run is when there's some sort of value add to the deal, meaning, all right, we're looking at buying into, let's just call it well A, and Mark's underwritten it. And he's like, hey, at this purchase price, we're looking at a 30% return. That's awesome. What I love is when I can look at it and say, I was able to get you what's called lease acreage along with that well bore, which means you're going to get additional well proposals in the future without having to spend another dollar to see those well proposals, right? And so I call that a value add, meaning the strategy here is let's go buy into wells, AFEs. There's great returns and there's a tax benefit because of the IDCs. Sometimes, not all the time, but sometimes you can also get the associated acreage with that well. When you get the associated acreage, that means any future well that's proposed on that land, you're the first person that's getting the proposal letter, which means you can invest in it again, or you can sell it, right? Like it just gives you a lot of optionality. So from the landman side, what I see as a home run is when I can bring like an extra piece to the puzzle, which is, hey, guess what, guys? And I was able to get you the acreage with this as well.
Love it. Thank you. Got a few more questions that popped in here. This is another one from Dave. What's the time window for you and Mark to source an opportunity, evaluate that opportunity, and then make an offer and then close typically?
Oh, so to source an opportunity, it could be any amount of time, right? I have people that I work with that send me deals on a weekly basis. But there's other people that I may meet with 15 to 20 times before I see their deal. But Mark and I both see deals every single week. So that's from, us both having been in the industry for me 16 years, Mark, I believe more than that, right? So long-standing relationships allow us to see deals weekly.
And Mark is receiving deals directly and you're receiving deals directly.
Yeah.
And we may, you may pass over opportunities to us to say, hey, I got this in the door. Mark, you might not have seen it, but Mark is directly receiving a lot of deals as well. On that note, I'd like to talk some more about the what happens after component. Mm-hmm. And Gabe, we'll get to your question about an MLS or a LoopNet in a minute here, but let's talk about an opportunity that we closed one, right? We've got a package of Comstock wells. And so do you want to talk a little bit about what happens from winning a bid and all the contract work that goes on behind the scenes?
Yeah, absolutely. And we can use the one that we've already closed for reference. And Dave, it kind of ties into your question about offer to close timelines and all of that as well. So recently, we closed last Monday. We closed some Comstock wells. We had actually made that bid a week before and found out that we were the winning bid and we're going to move forward. And that's kind of when I jumped in and started working with the seller's land team on closing documents, right? So we had prepared and submitted a bid. That's a very simple document. It really covers only the very, very basic terms. This is this deal. This is what we're willing to pay. Like that's about it. Once they like what you're going to pay, you have to move into the phase of closing documents, which can involve, some more negotiations. You typically move into what's called a purchase and sale agreement that defines a ton of different terms for the deal. It defines, how long you have to close. It defines how long you have for due diligence, meaning for us to really dig into the title records and make sure the seller really owns what they say they own. It defines what defects are, meaning if we jump in there and we find out they don't own what they say they own, there's a number of different reasons why something might be defected. The PSA, purchase and sale agreement, controls what is considered a defect and is not considered a defect, right? So we jump in and figure out that there's a little defect. You've got to make sure that the PSA allows for you to defect that thing. That's covered by the PSA. That's negotiated. So maybe getting a little into the details, but you'll also have defect thresholds in the purchase and sale agreement. That's something that we actually negotiated on this one. They had a threshold, I think, of 1%, meaning if you find a defect, but it doesn't impact the deal by 1% or more, you can't defect it. We were like, that seems a little high. Let's drop that down to 0.5%, right? And they agreed. Basically, the point of that is to make sure that you're not going through back and forth on something that's 0.001%, right? That's not material, but you're able to negotiate that. It determines, what the seller is going to provide to you. In this instance, the sellers agreed to provide us 100% of the materials that are available to them, meaning title records, right? Any title records that they have. We kind of talked about that earlier, that's really complicated, takes a lot of time. Any title opinions that they have. I talked about that, right? Like people have to research it, then it goes to a law firm, then they that any of those that they already have, they'll provide to us. So all of those things are part of that negotiation. Then We also have to file the actual assignment to us of record in county. So, or in this case, it's in Louisiana. Louisiana likes to call it parishes instead of counties, but in parish, you can go anything. I mean, these are real estate transactions, right? It's real property. So it does have to be filed of record in the county or parish. Fun fact, or at least I'm a title nerd, so I think it is, Louisiana is what's called a race state, meaning the first person to file gets the interest, right? So let's say that we bought something on May 1st. Someone else bought the exact same interest on May 2nd. They filed on May 2nd and we filed on May 3rd. The person that bought it on May 2nd gets it because they filed before us. So something that sounds extremely simple, right? Okay, we bought the deal, we closed it. Now we need to file it. Filing sounds like the no-brainer, easy thing. It's extremely important. So y'all know we filed it same day. We're good. But, right, like understanding like the jurisdictional rules, making sure you're getting something that you bought in a race state filed immediately is extremely important. That's another part of the process. I did that. That's already been done. And then facilitating due diligence, right? The seller here actually has 10 days to provide us with those documents I mentioned. Title records, title opinions, etc. That is this Thursday. So we should get those shortly. And then we have 90 days to dig into that and make sure, everything looks in order. And then we have to also notify the operator, right? We bought this interest from BPX, but the person drilling the well is Comstock. So we have to alert Comstock and we have to say, hey guys, like we bought this interest. We're participating now. Here's our recorded deed. Here's our election to participate with you guys. Update your decks. Anything that was BPX is now turbine or Waypoint, right? So, and I think that's a pretty good breakdown.
Yeah, I think so. Gabe had a question. Dave, we'll come back to yours. This kind of ties into the whole due diligence piece from Gabe. If the fund is participating in a well that, let's say, is being drilled by, let's say, EOG, wouldn't they be doing similar diligence? What would be the end-to-end process from our fund to a flowing well, or from the fund to a flowing well?
So a couple things. It's an excellent question. And this comes up all the time when you're buying deals. Sellers always say, we have the absolute best title records money can buy. Just go off of our records. You don't need to independently verify. You absolutely need to independently verify. Not because of bad faith issues or anything like that, but EOG is relying on the same field landman, the same title attorneys, right, as anybody else. They're all human. And something can be wrong when, a random guy in the basement of a courthouse misses one document, right? In a chain of title for a 2-miler is about 1,280 acres. I mean, you've got, 3,000 to 4,000 documents typically that affect ownership there. And if a landman misses one out of 4,000 documents, it can materially impact the ownership. So no, we don't want to overkill. We're not going to go rerun title for the 1,280, but we are going to re-verify what it is that we're buying. That's, just a solid business practice, because you don't want the same mistake that was made 30 years ago could affect things over and over and over again. Number one. Number two, if EOG is the seller, it doesn't necessarily mean that it's an EOG well, right? So EOG didn't necessarily do any due diligence on it. What happens is, because oil and gas rights in the United States get so fractionalized, you can have a number of operators or individuals even that own a leasehold or working interest into a particular section or well, et cetera. So let's say that EOG wants to go drill this well in Lee County, New Mexico. They really like these two sections. Well, they have to file a record in Lee County every time they buy a lease. What happens is clever, ambitious, smart landmen run out there and they're like, oh, EOG is leasing here. I'm going to lease here. I'm going to lease here, with no intentions of ever competing with EOG. They're not going to go try to drill their own well instead of EOG. What they want to do is they want to either participate, or they want to flip that lease to EOG, or they want to sell that lease to Turbine and Waypoint because they know this area is going to get developed, right? So oftentimes you'll have people with interests that have not done full due diligence, right? That you're buying from. And trust but verify is always fair. Yes.
Thanks, Cori. TJ, you had a few things that you wanted to chime in with. Please, if you can jump in.
Hey, Tait, yeah. First of all, again, Cori, thank you so much for being here. And that last piece you talked about, it really also highlights the significance of what Mark is doing for the due diligence process. Because yes, it is being proffered by EOG, if you will, but Mark's really going through there to go and check the track record of all the wells in that area to make sure that, that it is what they say it is, if that makes sense. Cori, honestly, my questions as I talk to investors really will be summed up in, hey, how can I verify Turbine's legitimacy in getting good wells? And that's why having you on the call is such a bonus, because you're the people, or you're the party that's actually out there, quote unquote, wheeling and dealing and getting us these opportunities. Some of the, to be perfectly candid, some of the questions are like, well, how is Turbine Capital and or Waypoint getting access to really good product? And can you kind of describe that process? And, as an oil and gas outsider originally, how can I look into a Waypoint Energy and say, hey, they're actually able to procure really good product, as opposed to going and trying to find some other group out there? Can you talk to that a little bit?
Question.
Yeah, absolutely. I will say, because again of the fractionalized nature of oil and gas in the United States, there is a lot of opportunity with private sellers, meaning I don't necessarily have to go buy from EOG to get into one of their good wells, right? There is a host of people that have a working interest in EOG wells. Everyone likes to mention EOG because they are considered like the premier operator in the premier basin. And so a lot of people want those deals. If I had to go buy that directly from EOG, EOG is often not selling their own interests in their own wells. You're going and you're getting it from that Landman in Midland, Texas. For example, we have a deal we're going to look at in Lee County, New Mexico in the coming weeks that is from an individual out in Midland, Texas, right, who has his ear to the ground. And it's like, I'm going to go buy some leasehold here because I think this is going to be developed. This is actually not by EOG, it's by Matador, but very reputable public Permian operator. And they reach out to a very small group of people. I think the question regarding like how Turbine is getting into good deals in oil and gas, which is highly competitive in a relatively new space for Turbine, is that they brought in experienced people with long-standing relationships. It is extremely important, and I don't say that because I'm someone with long-standing relationships. It really, truly is. Midland, Texas is where a ton of these deals are happening. You hear about the Permian Basin, West Texas, Eastern New Mexico, probably more than anywhere else. And I can tell you from experience, I had to live in Midland, Texas before anyone in Midland, Texas would show me a deal. They wouldn't do it. And I could visit all I wanted. And I like to think I'm a relatively personable person. I mean, I took people for beers for 5-6 years. They still wouldn't show me a deal. I moved out there. I lived there. I spent weekends there, went to brunches at people's houses. I mean, was part of the community. And all of a sudden they started sending me deals. It really is, that sounds simple, but it's just true. And so you really have to have some people that have been around for a while and are already plugged in. If not, your timeline to getting to good deals is going to be pushed out, right? I'm not saying you can't do it, but it's just going to take longer to find unique, good deals unless you've found a way to plug yourself into that pipeline and people that are already connected. And you guys, have done that. And so I think that's probably, it's a relatively simple answer, but it's just true.
It's well said. I think, if you can imagine, if we had not hired Mark and we weren't working with Cori and we were trying to get on everyone's list, I mean, it would be very, very difficult as a quote unquote newcomer. I also have been amused at the sort of the warm welcome that Turbine has received, having been in Houston. I was not expecting our story as a bunch of airline pilots to resonate, but it actually has. And so I think the combination of the longstanding relationships that Cori and Mark have in the industry, paired with our sort of unique story. You got to think, I mean, these people have heard the same story over and over again, private equity, Wall Street, or just basic PE groups that are capital aggregators. They haven't heard this story before, that it's, the largest network of airline pilot investors in the US. It's actually an interesting story. I mean, everybody here
Yeah.
knows that when you go to a dinner party and, how do you know there's a pilot at your party? They'll tell you. But that conversation usually doesn't fall flat. People have lots of questions because people are interested in aviation. So it's actually been, strangely enough, it's been
Yeah.
a leg up for our group.
Absolutely. I completely
And that was
agree.
not something I was expecting.
Everyone thinks y'all are cool. Okay, Matt beat me to the punch. Yes, everyone thinks y'all are just cool. They're like, oh my God, they're pilots. They're so cool. Y'all, you fact checked me on this, but I believe that Midland, Texas has the largest number of private planes in the country.
That wouldn't surprise me.
Yeah, I wouldn't suggest they have the highest number of skilled pilots in the country, but a lot of guys buy planes out there. So I mean,
a lot of billionaires in Midland.
yes, yeah,
and very low key, humble billionaires as well, not flashy.
Yes, that is absolutely true. But yeah, I agree that the story has resonated. It's very different from what they're hearing at industry events. And I think that is a huge positive as well.
Thanks, Cori. Circling back to Dave's question real quick, and thank you, TJ, for that. Did you have any follow on that before I kind of switch gears?
No, not now. A couple more later, if that's all right. I'll save them for the end.
Sounds great. Dave was asking, with a fund this size, 35 to 50 million, that's right in the ballpark of what we're shooting for this year. Are there any other bases to cover other than what Cori and Mark do? Yes, we have engaged one of the top law firms in Houston. They're called Haynes Boone to run our legal documents. They're obviously on the legal side of things for Waypoint. And then the other piece that we haven't really mentioned yet is the accounting side. This is one of those things that's difficult in the oil and gas space. And Gabe, I believe it was, yes, that was asking if there's an MLS or a LoopNet for land deals. The difficulty in owning your own non-op positions is that there's, as you're seeing, a lot of moving parts. There's a lot of complexities that you have the economies of scale for in a fund that you don't necessarily have the economies of scale for. I mean, even if you're deploying $500,000 a year into this stuff, that's quickly going to get eaten up because, you have Cori that needs to be paid for the work that she's doing. You've got Mark doing technical analysis. And then we also have our accounting firm. So when you look at the life cycle of looking at a deal, evaluating it, Mark running his technical analysis on it, saying, yep, I like this. And here's what the sort of a range of what we can pay for it in order for it to make economic sense, presenting the bid, potentially winning the bid, running our diligence, taking it down, recording with the state, the county. Then it goes to our accounting team. And that's something we haven't really talked about is we have engaged a firm called Oil and Gas Upstream Accounting. Very original name. But these guys are fantastic. And they're doing all of the asset level accounting. And then they work with a CPA firm very closely to get all of that back end data over to the CPA firm. So if you're thinking about like, should I buy a rental property or should I invest in an apartment complex deal, that's a much more of a realistic debate versus it's very difficult to put all of these pieces together. I mean, it's not terribly complicated, but it's expensive. And so it makes sense when you're putting together a $35, $50 million fund, you have the economies of scale to hire all these professionals and make these relationships, and you can make the machine work. But Gabe, if you ever did want to poke around, Oil and Gas Clearinghouse is an auction site that you can check out some deals that go to auction. Hopefully that made sense. TJ, what else you got?
The only other thing really would be, Cori, if you don't mind kind of talking two things. One, Mark talked about the NDA and how we are pretty tight with our data and what we're looking at, and that's to preserve our buying opportunities. So if you could talk a little bit to how that works, as well as kind of like our buy box and the caliber of what we're able to buy. Again, this is kind of a question that we get quite often. So
yeah. So CAs, NDAs, extremely important. The list that we talked about, you have to sign a confidentiality agreement, non-disclosure agreement to get on that list. And that is for very good reason. You're talking about publicly traded operators disclosing exactly where they're about to drill their next wells, sometimes pre-permit, meaning that's pre anyone else knowing, right? That's extremely valuable information, and you need to only be using it for the purposes of that transaction. A example would be, so I work in the non-op and mineral space. If someone worked in the non-op and mineral space was on the list to look at working interest deals with EOG, and they saw, okay, this is where they're going to drill next, and they had their mineral buying partner go start buying minerals out there, it would be a huge breach, right? And you would never be on any list ever again. No one would ever share anything with you ever again. Those days are extremely important. And, also keeping even just, the fact that you're bidding on it is confidential, right? That's probably the piece of CAs and NDAs that I have to remind people of the most is, even if you're not disclosing the terms of it, the fact that you're participating in the process, the fact that you're bidding on a specific deal is really something you shouldn't be disclosing.
And that's great. And it's that we're trying to thread the needle of transparency with our investors while also maintaining the sanctity of that partnership with the oil and gas operators. And so for the record, right, I mean, that's when guys ask like, hey, why can't I see what we're bidding in? It's like, we're absolutely willing to work through Mark to make sure that we are in compliance with those NDAs, because we do, absolutely want to be transparent with where your money's going.
Yeah.
But we want to make sure that we still have access to these fishing holes, if you will, or these places that we can go and get more oil and gas
absolutely
deals.
The previous compliance officer in me will come out in spades on this topic, because it does seem crazy how tight you have to be with it, but you really do. I like to think of it in terms of like, like you tell one person and that person just tells their spouse, right? That seems safe, but their spouse also tells their best friend, and then that best friend tells their spouse. And then it balloons. And also the story of how important confidentiality is gets tapered down, like none of those people have read the agreement. None of them realize that there are damages associated with breach, right? It's not just we won't see more deals. There is also a financial penalty that comes into play for breach, right? I mean, your attorneys, myself, we're negotiating the smallest penalty possible as part of the NDA CA negotiation, but it's still there, right? It's there. Losing deals is a major issue. Reputational damage, major issue. But there is a financial component to breaching a CA or an NDA as well. And so it's just not worth the risk. I promise everyone on this call, it is not worth the risk. So don't take it.
Well, and to be clear, once we own these things and everything is said and done, you're going to see exactly what is in the fund. It's just that we have to be very careful what we discuss, as we're bidding on things, buying things. So thanks for that question, TJ, because I know a lot of investors were sort of saying, hey, why can't there be more transparency into like what you guys are doing behind the scenes? It's like, we're sharing as much as we can. Well, hopefully this answers the age-old question of what does a landman do?
I hope so.
I got to be honest, I'm glad that there are people in this world that like doing this stuff, because I couldn't do it, Cori. Digging through records in the courthouse is not how I would want to spend my time. So we appreciate you doing it, and we appreciate you having you on our team. Appreciate the deal flow, and really appreciate your time, especially coming on and sharing what you do.
But no, thank you guys so much for having me on. I've enjoyed it.
Absolutely. If anybody wants to connect directly, we can put you guys in touch. But otherwise, Cori, thank you again, and we'll chat to you soon.
Anytime. Thank you.
All right. Thank you.
Bye.
Take care, everyone. Thanks.